How do I take a tax deduction for driving my car? How do I write off gas I spend on driving for my self-employed or contractor business? Amanda here from the Business Finance Coach, where I'm simplifying finances and helping you grow your self-employed work into a business. Welcome to the 5th video in this TurboTax entry series. And in this video, I'll be explaining the write-off while walking you through it in TurboTax. All right, so let's answer all of your questions about how you take a vehicle expense deduction for your self-employed business for taxes. Now we're on our summary page for everything for this business. We'll scroll down, and now we're gonna go into the business vehicle expense. Now, I already started adding this vehicle, and I'm going to go through it quickly with you and explain this deduction. First, there's some things to know about the vehicle expense deduction. You cannot choose gas for certain trips and write that off. Instead of being able to choose certain expenses, there's two methods for writing off your car expenses. For either method, you have to keep track of your miles that you drive. And then there are two different options for calculating the amount of your vehicle write-off. The first method is called the standard mileage rate method, which is just taking something around 50 cents a mile, it changes a little bit every year, times your business miles. And then that's the deduction. The second method is the actual expense method. As it sounds, this involves all of your actual expenses for running your vehicle. So you don't just keep track of gas for your business trips, you keep track of all of your gas, all of your repairs, all of your maintenance, tires, cleaning the car, everything to do with maintaining your vehicle. The actual expense method can require keeping track of a lot more things and be a lot more tedious. In either case, you have to keep track of all your business miles. For the actual expense method, you have to keep track of all of your personal miles too, because once you add up all of those actual expenses, you get to take a percentage of those actual expenses. Okay, so these questions we're gonna go through at first help you determine if you qualify and for which method of calculating your deduction you qualify for. Because like all things taxes, there's a bunch of rules. And the vehicle deduction, much like the home office deduction, is one of those things that's part personal. So in reality, there would be no deduction for it because it's personal, but because there are lots of rules that give the self-employed more write-offs. Okay, so I'm gonna click edit and show you my Honda Ridgeline. So they ask us about the vehicle and the date we started using the vehicle for business. We'll continue. So they want to know if we own our vehicle, because if we don't own the vehicle, we don't qualify to take any vehicle deduction. If we lease the vehicle, then some of the rules are a little different, and I'll tell you about those later. Was this vehicle available for personal use in 2017? Yes, this vehicle was available for personal use. Did you have another vehicle available for personal use? Yes, I had another vehicle. Why are they asking these questions? They should make sense. So if your vehicle is used 98% for business, or let's say 100% for business, and you had no, I didn't have another vehicle available for personal use, that doesn't make sense and could certainly be a trigger. Did you document any of the work miles you drove for this business? Yes, I documented my work miles. Again, that wouldn't really make sense if I didn't document it because it's required. Now, the IRS can ask to see your mileage log, and a mileage log means that you keep track of every trip you take in your car, and you can do this easily with apps. The information you need about each trip is the date, odometer readings starting and ending, the purpose of the trip, what was business related about it, and the total distance of miles. So these apps these days take care of all of this for you, and you can go in and quickly just give a business purpose or mark your trips as personal. That's a great way to keep track of your miles. And I guarantee you probably have more miles than you realize if you drive a lot for business. How do you want to enter your mileage? So now you get the choice. You can enter your odometer readings or you can just enter your totals. So I did 9,000 total miles and then 5,000 business miles. And the total miles includes your business miles. Business miles involve driving for business purposes. It doesn't include commuting. Commuting is driving from your home to your primary work environment. That's not deductible. Okay, continue. How many vehicles did you use for your business? 0 to 4. Now the software tells me you've got a standard deduction of $2,675. Now, if I choose to go with the standard mileage deduction, I'm almost done. They took 5,000 times 50 cents per mile or so, and that's my deduction. Do you want to see if your actual expenses give you a bigger deduction? Yeah, let's do it. So you can see that's pretty quick to enter if we're doing the standard mileage deduction. If we do the actual method, it's going to be a bit different. So now we enter our total expenses for the entire year. So gasoline, 4,000, oil, 700, tires, 800, repairs and maintenance, vehicle insurance, registration license fees, garage rent, which you pay to park, other expenses. These are all of your expenses. And what do they mean by other? Towing charges, auto club dues, amounts you spend for washing, waxing, and detailing, vehicle accessories, small parts, car and truck repair tools, tires, fixing flats. So really everything you spend on your car. Okay, let's get some info about who used this vehicle. They want to make sure that the person using it is a 5% plus owner in the business. This is a specific question on the tax form. Was your vehicle used for hire, like a taxi or limo service? No. That would be like Uber or Lyft. Did you purchase your Honda Ridgeline new? Did you trade in another vehicle to purchase your Honda Ridgeline? No. When did you acquire it? Now, I used the same date that I started using it for business. I said this was the day I purchased the vehicle and this is the day I started using it for business. Even if I didn't use it that day, as long as I was working for myself in this business on that day, that would qualify. Because if it was personal before I started using it for business, things get a lot more complicated and it's not typically in your favor for depreciation rules. Continue. Now they want to know what you paid because this amount, you can't deduct it all at once, but this is what depreciation expense is about. Depreciation expense is allocating that cost of this asset, something we use to make money in our business, that will last more than a year. We're allocating that cost over time and deducting it each year. That's what depreciation expense is. Continue. So they give me an option here because part of depreciation expense is called special depreciation. And one type of special depreciation is called Section 179. And that allows you to deduct a larger portion up front. With other types of assets, you can deduct the full amount, but with vehicles, there are much stricter rules. My business use percentage is 55.56%. That was at 5,000 miles over 9,000 miles. So they give me the maximum amount of a Section 179 deduction I could take, 1,756. So I enter that here. I say, okay, I'll take the full deduction. Why might you not want to do that? Well, if you don't have too much income and you're getting near a loss, if you don't take it now, you'll get it in the future when you have more income. So why not do that if you don't need the deduction this year? And we can click, you can see our recommendations. And that kind of explains exactly what I was saying. The other thing to realize about taking Section 179 is that if you start using this vehicle for less than 50% for business, then you have to recapture that Section 179 expense. So you may not want to take it this year if you're not sure you're going to use your vehicle for more than 50% for business going forward, and you don't want a surprise tax amount of almost $2,000. And so again, you'll have to recapture that if you stop using the vehicle for business or if your use falls below 50%, because a vehicle is what's called listed property. For assets and depreciation, listed property is something that's entertainment, qualifies as entertainment. Any assets that are used for entertainment, like cameras, microphones, vehicles, computers, if they're less than 50%, the special depreciation rules get a little less advantageous because you're not mostly using these assets for business, you're mostly using them for personal reasons. Okay, so I said I'll take the full amount. Let's go for it. Continue. Now, this is a really nice feature that TurboTax has. It's asking us, how long do you plan to use your vehicle for your business? You don't have to do this, but they're just going to figure out a comparison between what your deductions would be over the years to come under the standard method versus the actual expense method. Because why do all this work and use the actual expense method if you might have a bigger deduction with the standard mileage rate method, or if they're almost the same? So continue. And now they show me a comparison based on the information I just entered. If that all stays the same over the next 4 years, my actual expense deductions will total $29,975 versus my standard mileage deduction would be $10,700 over the next 4 years if everything stayed the same. Now, one thing to keep in mind is that if I choose the actual expense method now, I can never switch to the standard mileage rate method. If I use the standard mileage rate method, in the future, I can change to the actual expense method. The actual expense method is the highest in the first year because of depreciation. And once you lose that first year depreciation, you don't get it in the future years. So you can still switch at any time. However, if you lease your vehicle and you use the standard mileage rate method, you cannot switch to the actual method in the future. If I choose the actual expense method, I have to stick with it. So I'm going to choose it. Let's do it. And then these expenses are driving related expenses that you can deduct regardless of how you choose to write off your vehicle. Whether you use the standard mileage rate method or actual expenses, you still get to deduct parking fees, tolls, local transportation, property tax portion of your vehicle registration fees, and interest paid on your vehicle. The business portion of that amount will qualify for this write-off. And the way you know what to enter here is if you only entered your business miles and you took the standard mileage rate method, then you need to take your total interest and divide out the portion for business and enter that here. However, if you included your total miles like I did, the total miles 9,000, then you can simply enter the entire amount for the whole year, and TurboTax will calculate the percentage of that that's for your business. And remember, these little learn more buttons, very useful. Okay, we're going to continue. Great news. So my actual expense method was $7,718, much greater. We'll continue. And we're back to the vehicle summary. Every year when you come into TurboTax, your vehicle will carry forward. In the year you stop using it for business, you'll need to click edit. And on this first screen, check the box, I stopped using this vehicle in 2017. And remember, if you took any special depreciation, you will be prompted to recapture that depreciation expense as ordinary income. So it's just taxed. You can add another vehicle if you stopped using this one. And with that, we'll click done, and we have finished the business expense section. Be sure to check out my other videos in this series going through TurboTax, covering inventory, assets, other situations. If you have any questions, I'd love to hear from you in the comments below. If you liked this video, it would be awesome if you let me know by hitting the like button. And if you're self-employed, you want to organize your finances and grow your self-employed business, be sure to click the subscribe button in the watermark, but that may be gone. You may see my head above me here. Click that to subscribe, and happy tax season. I will see you next time. Bye.